Let's talk a little bit about the risk into 2020 for the UK economy. No deal Brexit, how real is it?
It's a risk. It's very real because at the end of the day, if we can't conclude a negotiation in that tight time frame of 11, 12 months, the default is a no deal exit. My own feeling is I've always been less pessimistic about the economic impact of that than most, and therefore remain relatively positive about the UK economy this year. But so long as the no-deal risk remains, then I think you're going to see this, what you've seen with sterling, essentially, that it remains... sterling traded much of 2019 as a Brexit currency.
Yep.
And so long as the no-deal risk remains, then I think it will remain weak.
You spent a lot of time at the Treasury.
Yeah.
And at the Foreign Office.
Yeah.
You spent a lot of time in Westminster, basically.
Yeah.
Give us your sense of the UK skill set going into this negotiation period. How strong is it? What do you think the objectives are going to be?
It's pretty strong. Obviously, I don't want to pick on names, but I think we've got essentially the UK has got a good negotiating team in place. That said, it will have to focus relentlessly, I think, and focus both on the EU negotiation, but also other parts of Whitehall will be kind of gearing up rapidly to do negotiations with other countries and set up negotiations.
Okay, let's talk about that compare and contrast.
Sure.
US here, EU here. Is it just a twin track kind of policy that is applied here? Does one get a priority over the other? I
think de facto the EU negotiation I think will take priority, but that's not to say there won't be a lot of effort expended on getting other countries, trade deals with other countries up and running as soon as possible. Now, those other countries, predominantly the US, but also we'll be looking at Australia, we'll be looking at Japan. We might look at something like the TPP, the Trans-Pacific Partnership. I think all of those tracks, if you like, will be gearing up during 2020. Having said all of that, most of the resources will be going into negotiating an EU.
Is it a zero-sum game? If the US gets there first and asks for X, does that preclude Y from the EU negotiation? How do the two get balanced?
There are elements of it that are, as you put it, zero-sum, but I think there'll be dynamic negotiations for that reason. As I said before, I think the EU one will take priority and precedence, and therefore the kinds of agreement we've made with the EU will affect the negotiations with other countries. But I think, to me, it looks like that the initial position, at least, will be heading for what you might call a skinny deal with the EU based on goods and maybe certain sectors in particular, which could leave a fair amount of flexibility to make deals with other countries.
How much regulatory alignment? Initially, 100%.
Yeah.
How much regulatory alignment do we have in, say, 5 years' time, do you think?
So I think in 5 years' time we may look quite different, but I think the key negotiating ploy will be that we start from a position of, as you said, complete regulatory alignment. We're not going to do anything dramatic, particularly on the things the EU cares about overnight, but we will drift, and we'll drift so that, as you say, in 5 years' time we might look quite different in some regulatory areas, particularly in financial services. And
what do you think of Bailey at the Bank of England? Because he has talked, I've talked to him about it, he's talked about that kind of regulatory drift, and to a certain extent, the bank, from a regulatory point of view, may feel quite unshackled now. And because there's plenty of regulations, people would argue, on the EU side that are very clumsy and inflexible when it comes to the financial services sector.
That's true, and as you say, the new governor has made that point in the past. Again, though, I don't think anyone's going to rush into anything. So I think come the end of 2020, early 2021, we will remain pretty closely aligned. That's the commitment, if you like, we'll make to the EU initially. But I think then we'll take time to have a look at, some of the things that do look a bit clunky or maybe not quite fit for purpose for the UK, and gradually sort of amend them, repeal them one by one, so that, as I say, in 5 years' time, we may look quite different. And I think that's the mindset, if you like, of the Bank of England as a whole, and probably of the new governor as well.
Just one final quick question. What does that mean for UK assets? We talked about sterling, but what does that mean for gilts, and what does that mean for equities?
So I think, generally speaking, I think, the Bank of England's probably on hold with a bias to cut this year, so gilts, probably do OK. Equities, I think, will get a bit of a bounce, especially if sterling stays relatively weak. So if it stays relatively weak, we'll see the FTSE 100 outperforming the FTSE 250 this year. Vice versa, of course, if we head towards some kind of deal. Yeah. Overall, I think the UK looks like one of the world's bright spots in equity market terms this year.